Good morning. I've got a monthly chart of the Dow up, because at the end of the month, this is what I normally do. Now, we have a key reversal month on the Dow. This is not a good pattern. You can't take away the fact that the Dow has been in an uptrend since 2009. I'm all up for that. I can see it. And I've always been a great believer in a bull market squeeze. But to see a key reversal month on an all-time high is quite scary, I think. I know it's quite scary. So if you look at what it's done over the 10 or so years, you can see that we have had periods of it stopping just prior highs, but then we took off. We stopped, and again, stopped, double based. Up we went. Now, at no point in this area here was there a topping pattern, but there was a base pattern. Now, markets run out of breath. They run out of steam. A bit like me, really. They run out of steam. But, this pattern, this line, this reversal month is so important. It really, really is. Always remember, markets look their best at a top and the worst at a bottom. Otherwise, in our world, we wouldn't have double tops, double bottoms, head and shoulders, inverse head and shoulders, and any other pattern you choose to mention. Now, a key reversal month off of all-time highs is astounding. Now, if we look at where the 21-month moving average comes in, you can see it's coming in at 24239. If you look at what the low did back then, it came in at 24122. So we just about kissed it. We closed above it. So far, this week has been negligible, but this I cannot ignore. It just can't be ignored. Now, when you put the technical indicators into the cake mix, look at what the stochastics and the RSI and the rate of change did. As we made new highs, we didn't on that month. We diverged. So a divergence from the price at all-time highs is of incredible importance. Is it going to help in our day-to-day trading? Not so much. But if you, in the back of your mind, see this key reversal week with these diverging indicators, you cannot help but think the Dow has had it for a while anyway. It could go down to 19,164, which would just at that 55-month moving average coming in at 2,056. Now, you're going to hear people talk about various trading strategies and mathematical calculations and God knows what. I just ask you, the price tells you where we're going. Nothing else, just the price. And at the all-time high, that price was slammed lower, okay? And it closed lower on the month. It is not a bullish signal. Now, you've got the monthly pivot coming in at 25729. That's the level we're going to be watching next week. Now, let's take a look at the weekly chart. Now, on the weekly, we've got the weekly pivot coming in at 24,900. This can be construed as a double top, okay? Markets do get a bit taken away with themselves. The high was 26616, as we know, and that day we posted a high of 26951. As I've said to you, it is very rare these days that markets do an exact double top. You have to be a bit lenient, I suppose, and take a look at what it did. On that week, we made a new all-time high, closed lower. On the day, we made an all-time high and closed lower. This is not a bullish sign. The only time that we are going to be worried about selling into shorts in the Dow is if we take out the next all-time high, which is now at 26951, and we go screaming up here. If not, if we can't do that, and looking at that chart, it is overbought. Can it get above here? I don't think so. Can it dither around here till the end of the year? Of course it can, and it will. And, you know, our ranges have gone stratospheric, really, since 2016. And this has been a real troubled time to sell and buy. However, these are the yearly lows, okay? We've already done the yearly high. These are the yearly lows. And the yearly low, which is at 223,360, is going to attract prices. 23344. It's going to attract prices. You know, that's the way markets work. If we get a close below that 23.6 on the weekly chart, a close at 24,213, that will be seen within days. Okay, let's have a look at the daily. Now, from the day that we posted the all-time high and closed at the low to the base, we've retraced 50%. Okay, so this is what we're looking at. The daily 25372 pivot. Look at your monthly, look at your 200-day moving average. See how it's cuddled it. Okay, the last couple of days, the 200-day moving average has cuddled the price. Watch it. If we start to go below 24990 and take out 24948, we're in trouble. We really are. We've got this there as a backup. What we could be seeing is the 50% down to this area here. Okay, don't forget what I've said to you about the weekly, yearly lows, because they really do try and head for it. We're looking to be a little bit overbought. Our ROC is still showing to trend down. All right, just keep it tight. And if you are selling, which I hope you all will be, but I'm on holiday next week, this is your sell area and or your get out area. And that is coming in at 25867 to 25871. So you want to be selling up to there, or if selling in this region, you've got to have your stop above here. Good luck, and I'll catch you all next week.